Hello, greetings, and welcome to Dividend Blasters. This is our 37th video. Topic today, dividend investors. This is why I invest in UPS. Yes, the United Parcel Service. I am an investor. I couldn't be happier. I am also a customer, and I love the service that I get from UPS. What I'm going to do is I'm going to share with you some of the basics of their business operations, and I'm going to talk a little bit about some of their financials and how they compare against their peers. All right, let's press on. First and foremost, I am not a financial advisor. The purpose of this video is not for financial advice, it is financial education. It reflects my own personal opinions, my research, and my experience as an investor for more than 30 years. So I urge you, do your own research, do your own due diligence, and consult a financial advisor prior to making any key financial investment decisions. All right, let's press on. So, what is UPS? A lot of us know what UPS is. We see the little brown trucks, some of them are pretty big, on the road. In some, they're an American multinational. They're a shipping and receiving and supply chain management company located throughout the US. They also have a footprint around the world. I'm going to get to that. They're a Fortune 500 company. They're one of the world's largest shipping companies. They're primarily known for their ground shipping as well as their UPS stores. They also offer shipping on an overnight and 2-day basis. They also deliver to post office boxes through special programs like UPS Mail Innovations and UPS SurePost. UPS is the largest courier company in the world by revenue. And this figure here came from their website, and this is from 2020. It's actually gone up, but in 2020, it was 85 billion. It's more than 100 billion now. Some of their key competitors are, of course, FedEx. Another one is DHL. Their main international hub is known as UPS Worldport, and it's in Louisville, Kentucky. It's the fifth busiest airport in the world by cargo traffic. The company is one of the largest American owned private employers in the United States. So that's a little background. This is a big company, folks. Here's just some corporate facts. And you can take your time and look at this. I'm not going to go through every point here, but the main points are that they were founded in 1907 in Seattle. They're headquartered in Atlanta. Their revenue in 2022, as I mentioned, they're over $100 billion. They have over 500,000 employees. All right. They are a supply chain juggernaut. A little bit more about their global footprint. Well, they have a footprint in over 120 countries. They have more than 1,000 facilities. All right. I'll let you read that at your leisure, but those are the key points I wanted to get to you. They have a fleet of aircraft. I mean, how could they be a multinational with a global footprint in other countries without having a fleet? You can see they have a wide array of 757s and A300s through 600s, 767s, MD-11s, 747s. As far as some of the technology, they are very wired, as are most companies nowadays. You can go to their portal on your computer or on your phone, and they have a wide variety of metrics to measure their demand. I think that one of the major uh, metrics that jumps out at me is if you go to the right panel, look at online traffic or tracking, I'm sorry, of average daily usage. They have tracking requests of over 743 million requests per day. What does that mean? People are going on their portal and they're checking the status of their package. Over 743 million tracking requests per day. That is massive. Okay, let's get to some of the summary metrics. So, as of yesterday, June 2nd, 2023, UPS closed at a trading price of $170.14. Their earnings per share is $10.76, more than sufficient to cover their dollarized dividend of $6.48 per share. I like that PE. Look at the PE. The PE is 1582. If you go to the left panels, you're going to see for comparative purposes what the PE ratio is for the Dow Jones. The PE, or the price earnings ratio, for the Dow Jones Industrial Average is 2248. For the S&P 500, it's a little smaller, but it's still more than UPS's. It's 18.68. I like that PE for UPS. That tells me it's a decent buy. It's a good value. It's a good sized company. Their market cap is $146 billion. This slide shows background on their price performance and their total performance. So price performance is price appreciation. You can see what it has been over the last 20 or so years, over 161%. That's not bad. When you look at total performance, well, that's price appreciation and dividends. And it jumps up to over 376%. That, to me, is a good performance. And the difference is that dividend. That dividend is decent. That is a decent dividend. Speaking of which, here's dividend summary. And I get a lot of my information from Seeking Alpha. I am a subscriber. It's a wonderful resource. They give UPS high grades, dividend safety B plus, dividend growth A plus, dividend yield A minus, dividend consistency A. I think that's pretty good. And this is relative to their competitors. So, like the FedExes and some of the other companies that I'm going to show you shortly. So, I told you about the dividend, the dividend rate or the forward dividend, $6.48. That yield percentage is 3.81%. That's a decent yield for a company. And the CAGR, or the 5-year growth rate, is 12.53%. And as a dividend investor, I typically like to see the yield and the CAGR at an aggregate level equal around 10%. Well, this exceeds that easily. This is basically almost 16%. The dividend growth uh, duration, or the streak, is 13 years. That's why they're getting a decent rating of an A in dividend consistency. 13 years is nothing to sneeze at. They keep it up, they're going to be a dividend aristocrat in 12 years. Okay. And so I did mention 648 annually, the dollarized dividend quarterly. It's a quarterly dividend company. It comes to about 62 per quarter per share. Let's press on. A little deeper on dividend growth. Well, I tell you what, you know what? You look at that left panel, and these are all pretty good. I really like to look at that 5-year CAGR. And again, look at that. It's a 12.53%. And I talked a little bit about this in the previous couple slides. That's a decent grade. The 3-year CAGR is even higher. It looks like it's almost 16%. The 10-year CAGR is 10%. Okay. So they have been doing pretty good on the growth rate. Here's a little bit of a history. You can see they are continuously, in the right panel, growing that annual dividend. And they have really grown it from 21 to 22. So they're growing at an increasing rate. Very nice. Very, very nice. This here is a chart that shows their competitors and how they stack up. You know what? I'm very familiar with FedEx. That to me is their closest competitor. This is what Seeking Alpha provides. They didn't include DHL. We could pull them, but I really think that it's FedEx is their closest competitor. They have Deutsche Post, which is a German company, DSVAS, ZTO Express, which is a Cayman Islands company, and another company much smaller called Expeditors International of Washington. The key takeaway here is the size. The market cap really is much bigger. First and foremost, their closest competitor by market cap is about 1/3 the size of UPS. UPS is much bigger in market cap. Number of employees, FedEx has more employees, interestingly. Uh, UPS has 418,000. FedEx has 446. Deutsche Post has almost 600,000. Then the rest of the companies are very small. And you know what you're going to see with the three smaller companies to the right? You will probably see some larger growth rates, but the base is smaller. The revenue is smaller. So they're much smaller growing concerns. All right, let's press on. So here's just for context purposes the closing trading price. What's interesting is that FedEx, which is one third of the market cap, the price is much pricier. It's about $50 more per share. So UPS closed at 170, FedEx closed at 221, and the others are significantly smaller. All right. So total return, and you know what? I would say the 1 month, the 3 month, the 6 month, the 9 month, you're going to see negative because the market has been very volatile. In a lot of 2022, everybody lost. 2023 is a little different. It's been coming back. Okay, so year to date, they're almost breaking even. FedEx is actually doing better. Price return in year to date and in 1 year return. But if you look over that longer time horizon, UPS is outpacing FedEx. 3 year return, 83%. Now, this is total return. Okay. So it's price appreciation and dividends. 5 year return, 69%. FedEx is losing. Okay. They are losing. 10 years, UPS 167%. FedEx not bad, 157. But UPS is doing better. Let's look at dividends. How do UPS stack up? Well, let's look at the forward dividend yield. That's where I'm going. 3.81% to FedEx's 2.27%. So UPS wins on the yield. Let's go to the payout ratio. Now, payout ratio is really a safety metric. How safe is that dividend? Typically, you don't like to see a company have a payout ratio, which is a ratio of dividends paid out over earnings. You don't want to see anything more than 60%. So they're safe. FedEx's is smaller, 27%. So they're very safe. But you might ask, why are they so conservative? Maybe there's something to look at. I don't know. They are a big company. I would ask, can you increase your dividend? Or if you can't, why not? That's what I would like to know. And then I'm looking at growth. Okay, so the 5 year CAGR for UPS is 12.5%. That's a phenomenal measure. FedEx's is a little better. They are increasing their dividend on average for the last 5 years, 18%. So that's pretty good. I would say I like their CAGR a little bit better than UPS's. But let's look at the history. The history of consecutive years of dividend growth: UPS 13 years, FedEx 2 years. So I like UPS more. I'd say they win there, but I'm watching FedEx because I like their CAGR. I'd like to see if they can maintain that CAGR. Let's go to the next one. Dividend grades. Well, UPS, outstanding. They get a dividend safety grade of B plus. FedEx gets an A, and that's really because they have a lower payout ratio. Dividend growth, well, UPS gets an A plus. FedEx gets a B. Dividend yield, UPS gets an A minus. FedEx only gets a C plus. Dividend consistency, UPS A, FedEx B plus. Dividend grades overall, UPS wins. Valuation. So here I'm looking at price, and I'm looking at price relative to earnings. So let's take a look at the forward PE ratio. I see 15.86 for UPS. For FedEx, 15.61. So about the same. FedEx is tiny bit better, not bad. Sometimes if we want to see who separates, we look at some of the other metrics. So let's look at the other PE ratios. I am seeing about the same thing for PE non-GAAP for 1, 2, and 3 years. A little bit more for UPS than FedEx. Okay, so I'm not finding out anything new there. So, okay, so maybe they're a little bit pricier relative to earnings. I don't know, but I do know this, that price dollar for dollar, UPS is about $50 cheaper. And that's what's coming out of my wallet. So that's what I'm looking at. But they're both close. They're really about the same PE wise. Growth. Well, let's take a look at growth. I would say I like to look at the forward revenue growth, and FedEx has a better growth rate, 2.88% versus UPS's 1.18%. That could be because UPS is much bigger. Maybe they're growing slower. I am curious. The 5-year revenue CAGR is identical for both. Okay, that's fascinating. Let's look at net income. Okay, FedEx does not measure it for 3-year CAGR. All right. I'm not getting anything more out of that slide. Let's move on. Well, gross profit margin, they're both about the same. Let's look at net income margin. Well, this is interesting. The net income margin for UPS is about 3 times that of FedEx. So I would say UPS comes out on top there. Return on equity, UPS is about 5 times as much. Return on assets, UPS is about 2.5 times as much. Return on total capital, UPS is about 3.5 times as much as FedEx. Cash from operations, more than $3 billion more. So 11.98 billion for UPS, 8.9 billion for FedEx. Revenue per employee, it's not measured for FedEx, but for UPS, it's $240,000. They do measure net income per employee. Wow, look at this. Net income per employee. This is an interesting metric I like to look at. UPS is about 4 times that of FedEx. So FedEx is about $6,700 per employee. UPS is 25,786. Fascinating. I mean, on profitability, I'm going to give it to UPS. Price performance. I already talked about total performance, and to me, I think that's the better metric because it looks at dividends. But what you see here basically is that over the longer time horizon, the 3-year, the 5-year, and the 10-year, UPS outperforms FedEx. Over the shorter term, UPS did not perform as well. But as a dividend investor, I'm investing for the long term. I am focusing on building my holdings, building my dividend snowball so I can increase my wealth and uh, glide path to financial independence. All right, next slide. Risk. Well, I'm looking at the betas. And I'd say they're about the same. Okay, and the betas, if you recall, basically measures of risk or price volatility relative to the larger market or the S&P 500. The beta for UPS has come down from the 60-month to the 24-month. It's less than 1.0. 1.0 is equivalent to the S&P 500. It's about the same for FedEx. So they're both fairly stable uh, price investments. You're not going to see a lot of volatility. I will say that 2022 is an outlier. We did see volatility there for UPS. All right. Hey, folks, I'm covering really with a focus on UPS versus FedEx because it's really their main competitor. I mentioned the post office, but that's really not a company you can invest in. So my focus is on FedEx. I don't have DHL here. I can save that for another video, but that's where the focus is. This slide speaks to some of the key income statement and balance sheet measures. The income statement, the revenue is about well, here it's almost 99 billion. For FedEx, it's about 93 billion. Revenue per share, well, there's fewer shares presumably for UPS, so it's about a third of that per FedEx. Gross profit, it's about 24 billion for UPS, 22, almost 23 billion for FedEx. Operating income, UPS is about almost 13 billion, FedEx is about 5 billion. So the operating income is much bigger. Let's go to balance sheet. Cash is big. They have, looks like 9.4 billion for UPS, 5.4 billion for FedEx. That's a lot of cash. Of course, there's more shares for UPS, so the cash per share is going to be less than FedEx. Well, and here's something interesting. Total debt is 26.4 billion for UPS. The company with the smaller market cap has more debt, 38 billion. So 38 billion for FedEx, 26 billion for UPS. Net debt, well, the net debt for UPS is 17 billion. For FedEx, it's 32.7 billion. Much, much more. If you look at the debt to equity ratio, they're both over 100%. And that's probably something I would take a closer look at for both of them. That seems like a lot of debt, but it's actually much more for FedEx. Long-term debt, they're both around 19 billion. And you can take a look at the ratios, the current ratio, the quick ratio, they're both about the same. All right, let's press on. Cash flow. Well, as I mentioned earlier, I did talk about cash flow. Cash is almost 12 billion from UPS, and it's a cash from operations or net operating cash flow. It's about 3 billion less, or almost 9 billion for FedEx. Capital expenditures. This might tell some of the story. Capital expenditures for UPS has been 4.83 billion, FedEx 6.8 billion. So they're spending a little more on investing in capital. All right. So what are the key takeaways? First and foremost, UPS is a global shipping and receiving company and supply chain management company. They're a Fortune 500 company. Key competitors, FedEx, also the Postal Service. I mentioned DHL. I will go into more detail on DHL in another video. Their revenue is over $100 billion a year. UPS has more than 100,000 employees, footprint in over 120 countries, more than 1,000 facilities. They have a low PE ratio compared to the market. It's a good buy and it's a good value. Their cash flow is excellent. It's greater by far than FedEx's. They have excellent price and total performance, especially over the longer term horizon. So the 3-year, the 5-year, the 10-year, they're outpacing FedEx. And you know what? They have a great dividend yield and a great CAGR, or compounded annual growth rate, for the 3, the 5-year, and the 10-year. And I focus on that 5-year CAGR, and I do like that they are exceeding the 10% hurdle between the dividend yield and the dividend growth rate, or the CAGR. They're around 15%. So simply a great value. So, folks, I would kindly ask, if you thought this was an informative video, give us a like and subscribe to our channel and share it with a friend or a family member. Until our next video, have a great day and God bless.